All right, welcome back, everyone. We're doing a deep dive into Alibaba's latest earnings call today.
Yeah, it's going to be a good one.
And, if you've been following this company, they've really been laser focused on two main things, right? E-commerce and their AI plus cloud business.
Right.
And they're seeing some really serious momentum in both these areas.
Definitely.
Plus, they've been kind of shedding some of their offline assets,
Yeah.
which is seems to be really strengthening their core businesses and boosting their ability to generate profits.
I think what's really interesting for me is like that strategic divestment of those non-core assets.
Right.
It's a clear signal that they're doubling down on what they think is going to drive their future growth,
Right.
which is e-commerce and the powerful combination of AI and cloud computing.
Exactly. So let's start with the cloud dominance.
Sure.
Alibaba is already the top dog in Asia for cloud services.
They are.
And they're holding strong as the number 4 cloud provider worldwide.
Yeah, it's pretty impressive.
Yeah, it's a pretty impressive position to be in, don't you think?
Absolutely. But they're not just resting on their laurels. Their AI-related products are seeing explosive growth.
Right?
Revenue is shooting up by triple digits for the 6th quarter in a row.
Wow.
That tells you there's a huge appetite for AI solutions across all kinds of industries.
Yeah, and Alibaba is clearly positioning themselves to capitalize on that demand. Their latest AI model, Quinn 2.5 Max, is making waves in the industry with its performance. Over 90,000 developers worldwide have built applications using Quinn.
Wow.
That makes it the most popular AI model for developers.
And to support all that development, they've got the Balian platform, which lets companies and developers tap into Quinn's power through APIs. Over 290,000 have already jumped on board. So they're not just providing tools, they're building a whole ecosystem around AI.
Okay, so now let's talk e-commerce, Taobao and Tmall. But what's so fascinating is their continued focus on attracting new users and making the shopping experience even better. And it's working. They saw strong growth in both new customers and orders this past quarter.
It's really interesting to see the growth in their 88 VIP program. This is their core customer group, and membership jumped to a whopping 49 million by the end of the quarter.
That's huge.
That's a lot of loyal shoppers.
It's a lot of loyal shoppers, and that loyalty translates into some serious revenue. Their customer management revenue, CMR, which basically reflects how effectively they're monetizing their platforms, grew by 9% year over year. So they're growing their user base and finding ways to make more money from it.
Exactly. And it's not just limited to China. Their international e-commerce business is also booming, fueled by cross-border sales. And a laser focus on operating efficiently.
Right. They're making smart investments in key international markets.
And
it looks like their efforts are paying off. They're even expecting their International Digital Commerce Group, or ADC, to become profitable next year.
That's a big deal.
That's a big deal.
It definitely suggests they've got a handle on their international expansion strategy.
Right.
And speaking of profitability, Alibaba is making moves across the board to improve operating efficiency and boost profits.
You're right. Several of their businesses are achieving profitability, like their mapping service, AMAP. And they're aiming to have most of the remaining loss-making businesses break even within the next couple of years. They're not afraid to set ambitious goals.
It is very ambitious.
It is.
That's what I find so intriguing about this earnings call. On one hand, they're laser focused on squeezing more profit out of their existing operations. But on the other hand, they're not holding back when it comes to investing in the future, especially in AI.
Exactly. And they're putting their money where their mouth is, planning to invest heavily in cloud and AI infrastructure over the next 3 years. They say it will exceed their spending over the past decade.
That's commitment.
Now that's commitment.
It's a bold move, especially considering the competitive landscape.
Yeah.
But it shows they're all in on AI and believe it will be a game changer for their business and potentially for entire industries.
And before we move on, let's touch on share buybacks. They bought back $1.3 billion worth of shares in the December quarter.
Wow.
Which shrunk their share count by 0.6% when you combine that with the $10 billion buyback from earlier in the year. They've actually reduced their share count by a total of 5% in just 9 months.
That's significant.
That's a significant chunk of change.
It really is. It suggests they believe their shares are currently undervalued. It could be a way to reward shareholders and boost the value of their stock.
So what we're seeing here is a company that's firing on all cylinders. They're growing revenue, boosting profitability, expanding internationally, and making massive bets on the future with AI and cloud computing.
Yeah.
But the big question is, can they maintain this momentum?
That's the million-dollar question, isn't it?
It is.
They're operating in a fiercely competitive environment, and the stakes are only getting higher, but they've got a proven track record of success, and their commitment to innovation is undeniable. It's going to be fascinating to see how it all plays out.
Okay, so we've established that Alibaba's growth engine is humming along nicely, but let's dig a little deeper into what's driving their success, especially in their core e-commerce business.
Yeah.
You know, Taobao and Tmall are practically household names in China.
Mm-hmm.
But what's the secret sauce that keeps them on top? Is it all about innovation and user experience, or are there other factors at play?
It's definitely a multifaceted strategy.
Okay.
Alibaba has consistently invested in making online shopping seamless and engaging with features like personalized recommendations, live stream shopping, and even gamified promotions.
Yeah, they're constantly innovating to keep users coming back for more.
Exactly. And let's not forget the sheer power of their ecosystem.
Right.
You know, they've built a network that covers everything from payments and logistics to entertainment and social media.
It's like a one-stop shop for consumers.
It is.
Which creates a powerful flywheel effect.
Yeah.
For both user engagement and merchant participation.
Precisely. That ecosystem acts as a formidable barrier to entry, making it incredibly difficult for competitors to replicate Alibaba's comprehensive offerings. But they're not complacent. They know the competition is always evolving with new players entering the market and existing rivals stepping up their game.
And that's where their focus on AI and cloud computing becomes even more critical.
Yeah.
By leveraging these technologies, they can create even more personalized and engaging shopping experiences, optimize their logistics network, and gain deeper insights into consumer behavior. They're playing the long game and staying ahead of the curve.
Absolutely. And this proactive approach extends to their international expansion as well. You know, they're being very strategic, choosing key markets and tailoring their approach to fit the local nuances. Their acquisition of Trendyol, the leading e-commerce platform in Turkey, is a prime example of this targeted expansion strategy.
They're not simply chasing global presence for the sake of it. They're strategically planting flags in markets that align with their overall growth objectives.
Right.
It's a calculated and well-thought-out approach.
It is. Now let's shift gears and talk about their massive investment in AI.
Okay.
While the long-term impact remains to be seen, it's clear that Alibaba believes AI will revolutionize not only their own businesses, but entire industries. They're committed to developing advanced AI infrastructure foundation models and AI-native applications.
It's an incredibly ambitious undertaking.
Yeah.
But are there any potential risks or challenges associated with this bet on AI?
One of the biggest challenges is the fierce competition in the global AI landscape. You've got giants like Google, Microsoft, and Amazon pouring billions into AI research and development.
Right.
Alibaba needs to constantly innovate and differentiate itself to stay competitive on a global scale.
So it's a high-stakes race for AI dominance.
It is. Okay, so we've talked about growth and strategy, but let's dive into Alibaba's financials. Their strong revenue growth and expanding EBITDA paint a pretty rosy picture. But are there any potential vulnerabilities investors should be aware of?
That's a good question.
One area to keep an eye on is their reliance on the Chinese market.
Okay.
While they're making progress internationally, the majority of their revenue still comes from China. Any economic fluctuations or regulatory changes in China could have a significant impact on their performance.
That's a valid point. Investors need to be mindful of the geopolitical risks associated with investing in a Chinese company.
Yeah.
Trade tensions, regulatory scrutiny, and political uncertainties can all create volatility and impact their bottom line.
Another factor to consider is their increasing debt load.
Okay.
They've been raising capital to fund their ambitious investments, which has pushed their debt levels higher while they have a strong cash position away. Investors should monitor their debt management strategies closely.
It's all about finding that sweet spot. Balancing funding for growth initiatives with maintaining a healthy and sustainable financial profile.
Right.
It's a delicate balancing act for any company, especially one with such ambitious goals.
Now let's zoom in on their cloud computing business. Alibaba Cloud is a major growth engine for the company, but it also faces intense competition both domestically and globally.
What strategies are they employing to maintain their leadership in cloud services and fend off rivals? Are they focusing on price innovation or a combination of both?
It's a multi-pronged approach. They're investing heavily in expanding their global data center footprint, offering a wider range of cloud services and developing cutting-edge technologies like serverless computing and AI-powered cloud solutions.
They're also forming strategic partnerships with key players in various industries,
Right.
tailoring their cloud offerings to meet specific business needs. They're not just selling generic services, they're providing customized solutions.
And they're actively cultivating a vibrant developer ecosystem around their cloud platform. By empowering developers to build and deploy applications on Alibaba Cloud, they're fostering innovation and expanding their reach.
It creates a win-win scenario where developers benefit from Alibaba's infrastructure and resources.
Yeah.
And Alibaba benefits from a thriving ecosystem that drives cloud adoption.
This focus on fostering a developer community is crucial, especially as they aim to attract international clients and compete on a global scale. It's about building a global network of collaborators and innovators.
Now let's talk about Alibaba's share buyback program. They've been aggressively repurchasing shares, which is a strong signal of confidence in their future prospects.
But what's the main driver behind this buyback spree? Is it purely a move to enhance shareholder value, or are there other strategic considerations at play?
It could be a combination of both. Share buybacks can increase earnings per share and signal to investors that the company believes its stock is undervalued. It's a way to reward existing shareholders and attract new ones.
However, it's also worth noting that share buybacks can be a way to offset stock dilution from employee stock options. Investors need to carefully analyze the rationale behind buyback programs and assess their long-term impact on the company's financial health.
So as we delve deeper into Alibaba's performance, we're seeing a company in transition. They're balancing their core e-commerce strength with an ambitious push into AI and cloud computing.
It's a complex equation.
It is.
With both tremendous opportunities and inherent risks.
Right. This raises a crucial question for investors. Can Alibaba successfully navigate this transformation and emerge as a global leader in the AI-driven future?
That's the big question, isn't it?
It is. It's a question that will be answered in the years to come, and it'll be fascinating to watch it unfold. All right, so welcome back to our deep dive into Alibaba's latest earnings call. We've covered a lot of ground.
We have.
From their impressive financial performance to their ambitious expansion plans and that bold bet on AI.
Definitely a lot to unpack.
It is a lot to unpack. So now let's distill some key takeaways that should be on every investor's radar.
Sounds good.
First and foremost, Alibaba is clearly in growth mode.
Yeah, no doubt about that.
Their investments in e-commerce, cloud computing, and AI are substantial. They're not just playing defense, they're actively shaping the future of these industries.
And their commitment to profitability is noteworthy.
Right.
They're balancing those growth investments with a focus on operational efficiency and sustainable revenue generation. It's a sign of maturity in their business strategy.
And third, Alibaba is facing intense competition both domestically and globally.
For sure.
They need to constantly innovate and adapt to maintain their leadership position. It's a dynamic market, and they can't afford to stand still.
And of course, their bet on AI is bold.
Right.
And potentially transformative. If those investments pay off, they could become a dominant player in the AI-powered future. But it's a high-stakes gamble.
Right, it is.
With inherent risks.
And fifth, investors need to carefully consider the geopolitical and regulatory risks associated with investing in a Chinese company. The landscape can shift, quickly impacting performance and potentially creating volatility.
All crucial factors to keep in mind.
All right, so those are all excellent points to consider. Now let's have some fun.
Okay.
And wrap up with our This Is Not Financial Advice segment.
Always a favorite.
Okay, so here's a wild thought. What if Alibaba's AI investments lead to the creation of hyper-realistic digital avatars?
Oh, wow.
That can shop for us, attend virtual meetings, and even manage our social media?
That's an intriguing, albeit slightly unnerving concept. Imagine AI agents negotiating the best deals for you, attending boring webinars in your place, and crafting witty social media posts that go viral. It raises some fascinating questions about the future of work and leisure.
Right. And who knows, maybe these digital avatars could even become influencers in their own right, promoting products and services in the metaverse. It's a bizarre but plausible scenario given the rapid advancements in AI.
I'll admit that's a vision of the future I hadn't quite considered, while it sounds far-fetched. Now, Alibaba's aggressive push into AI could indeed unlock some unexpected possibilities down the road.
Well, that wraps up our deep dive into Alibaba's latest earnings call. It's been an insightful journey exploring their impressive achievements, strategic moves, and potential future paths.
Absolutely a company to watch, for sure.
As always, remember that investing involves risks, and past performance is not indicative of future results. But with careful analysis and a healthy dose of curiosity, we can all navigate the complex world of investing and perhaps even uncover some hidden gems along the way.